Hi traders, welcome back to another trade recap. It's been a while since I uploaded any YouTube video, mainly because I was a little bit busy for the past 2-3 weeks, and I went to Thailand, just came back, and yeah, today I took 3 different positions: Aussie dollar, dollar yen, gold, 2 winners, 1 loser, out for 7R net. So let's go into the chart and let's have a look on Aussie dollar, which is my first setup. So all these setups are taken separately. I don't take them all at once, all taken separately. If you look at the 15-minute, let's have a look at the high time frame first. Why did I specifically looking for some bounce or bullish reversal trade on Aussie dollar? It was mainly because I knew that overall structure is pointing bullish from a short to mid term, high lows. Yes, we have equal highs, but what's more important to me is the fact that price is defending high lows. And also, if you pay attention, we are bouncing off the 50 EMA on the daily. So these are some of the high time frame confluences that I was looking to trade when I was taking this setup. If you drop down to the 1 hour, you can actually see that what are we actually doing. I want all of you to remember, when you're planning to take any particular setup, it has to make logical sense. Think in terms of the retail trading space, right? We have that massive sell-off, consolidation, break under 0.6755. When price broke under that 0.6755, what do you think the majority of retail traders are likely to do? They are looking to sell the pullback, right? We have a break and retest, they go short. But if you drop down to the 50-minute, you can actually see that this is not an actual break and retest. It was actually a simple failure, or what we call a rollover, within my community. So this is a setup that I posted in my community as well. Was trading the rollover pattern. Rollover basically means we have multiple failures right after we break through a major level. We broke through this 0.6755 level very aggressively. See that sell off? And right after we break down, what happened? We paused, sort of just stopped there, when we have 4 failures. 1, 2, 3, 4. 4 failures, rejecting that 0.6726 level. This is just a pop in, pop out, not considered a level. Then yeah, if you look at the 1 hour, my entry was entered right after the 1 hour bullish pin bar. Stop loss under the pin bar, that's it. Only about 8 pip stops. Why did I decide to close the trade for about 5R? Again, it was a manual close, which means I closed the trade with the intention of knowing I know I'm not closing at the best spot. That's fine. The main reason is still because I don't like to get involved in the Asian session, especially from early to mid Asian session. I usually don't like to have any entry there because the volatility is low, the movement is just not there. So when I see that, I took this on 9 AM Malaysia time. You can see at the bottom, 9 AM Malaysia time, which means at that time price action should be relatively slow because the volatility just wasn't there. But when price started to move so aggressively into my favor, I know that the right move to do was actually to close full position. Why? Again, there's no guarantee on this thesis, but based on my experience, most of the time Asian session doesn't provide a clean move. If it does provide to me, I want to play a little bit more safe, a little bit more conservative. And if when it goes to 5R, I say, hey, that's enough, I'm out of the trade. If it does have some sort of resumption on the London session, then I would join the momentum back. I actually missed out a trade here, I have to admit that. I was aiming to trade around 0.6755, but I was distracted by other stuff, so I wasn't able to get involved on this pullback. If you all can see, that's actually just a typical bullish continuation pattern. We have a break above that 0.6753, have a retest, push all the way up. So missed out the trade. Let's move on to the second setup of the day, which is dollar yen. So dollar yen was arguably the worst performing setup today. I took the trade and it was a simple one as well. Yesterday, some of you may not know, yesterday I had 2 setups on dollar yen, net for about still 4 or 5R. took a trade off the rollover pattern. Again, if you don't know what's a rollover, rewind back a little bit the video, then I actually talk about what is a rollover in the beginning. Failed to break through the high, rolled all the way back, formed an intermediate structure, pushed all the way down. Yesterday I took this trade, closed for about 5R plus. Then we have a pullback. I traded the pullback, but it wasn't working. That's why I scraped off the position, and that's it for the day. So today what I was doing was essentially I want to get back at the initial yesterday's entry level, but I wasn't able to get into that level, and that was mainly why it created some sort of FOMO, some sense of urgency that I really was seeing that sell-off as the primary signal of a push to the downside. That's why you can actually see when it sold off that ascending channel pattern, broke under the bottom band, I took the retest and it didn't work. Alright, chopped all the way back to my entry, but ultimately still come all the way down. But right after I took this loss, psychologically, the right thing to do was don't take any trade, and that was what I was implementing as well. When I take a loss like this, especially when price just did a move, yesterday I took a second re-entry here, get stopped out. Now another entry, I get stopped out. I need to stop a little bit to see if there's anything going wrong with my price reading, with the market condition. That's why it was a good choice as well. I knew I can quite confidently say that this thing will drop all the way back to 140.45, but the main thing is still this: there is still a lot of other opportunities around. There's a lot of other pairs. If you feel like the market condition isn't really aligning to your thesis, then you need to stop trading, no matter how much you think that, oh, it's working. But sometimes you just have to pull the handbrake and say, hey, something is not right. If I continue trading this, what are the consequences? Revenge trading, over risk, FOMO, sense of urgency, whatever. Alright, so these are some of the things that I really consider when I'm looking for any re-entry, especially when I take 1, 2, 3 loss. Then I still consider to take the same thesis, the same setup. That is usually where I have to be really careful with my mindset and my behavior. So when we are talking this, we actually have some sell-off, but yeah, that's fine. Moved on to the third one, which is gold. So gold was a fairly quick one. I won't go to the high time frame. It's fine. Let's go to the high time frame. On the daily, the main thing that I was trading the buy was because on high time frames, this is still bullish. Why? Because we're defending high lows, love the deep retracement. One of the biggest problem among the retail trader is that most of the time when we clearly knew that price is in an uptrend, but when price started to pull back a little bit deeper, we start shifting our bias and we start shifting the structure and say, hey, that's bearish. That's one interesting thing about retail traders, because we always get caught onto the wrong side, not because we don't know how to trade, but because most of the time when we have a correct thesis, it always somehow get distracted by some short-term noises. And that is one thing that all of us have to master, which is if you know the high time frame is bullish, then I would much rather you don't take any trade until the buys play out. Get what I'm trying to say? Again, if you know that the high time frames are bullish, then I would much rather you don't do any short position in between, just stick to the buys. Wait for that deep retracement come in, wait for the discounted entry coming in, then you go long. Step the pedal a bit harder, scale in, etc. So this was that was not related to this setup. Again, I took this trade based on the 5-minute. Price have that massive sell-off on the, I can say, mid-London session, between the exchange session. Prior to New York Open, we just have that massive sell-off. Then when price come back to the prior low, I knew that very high chance that was just a bounce. Again, how do I know that? Based on my experience. That's it. Based on my experience, we're likely to have a lot of bounce pre-New York session. Then on the New York session, we just have that massive recovery. But if we pay attention to how I exit the trade, where did I exit the trade? I exactly at the high, the nearest structure. When you're playing the bounce, when you're playing the range, make sure you don't get greedy. Because a very big problem again among the retail traders are they knew that price is in a range, but they somehow don't treat it as a range. If you know it's a range, then there is a high probability that price will reject the high or reject the low, then reverse all the way against you. But a lot of people, when they take a trade like this, what happened? They start pulling their TP target a lot higher and say, I want to aim that high. But you knew that we're in a range, right? If you knew that we're in a range, means price is in an agreement, means you shouldn't be looking for unrealistic target. And I'm glad that I closed the position at the price high for about 4 hours sharp, 4.06, then reverse all the way against me. If I didn't close the position, it would have been a loss, from 4R to a loss. So it wasn't worth it. So that's it for the trade recap, and I hope all of you learned something new. And yeah, hope you enjoyed the trade recap series as well. It's been a while since I uploaded any video. Apologize for that. If you like the video, please don't forget to like, share, subscribe, and I'll talk to you later. Bye bye.